Welcome to Tech I Spy, the channel, where we dissect the bold, the brilliant, and the occasionally bonkers world of modern tech. Today, we're analyzing a company that's not just building products, it's trying to build life itself. Ginkgo Bioworks, ticker symbol DNA, a synthetic biology company rewriting the rules of biology like it's Python code. And we're going to unpack it all: the strengths, the weaknesses, the wild opportunities, and the very real threats. Because here's the mission. This channel aims to cover the 10,000 plus tech companies listed on the world's stock exchanges, one way or another. Big names, sleeper stocks, moonshots, and monsters all hiding in plain sight, ready to be found. If it's disruptive, if it's fascinating, if it's a little bit mad, we're talking about it. This is a podcast-style episode, so settle in. And if you like deep dives like this, SWOTs with soul and strategy, hit subscribe, drop a like, and let us know who you want next. All right, let's open the Petri dish. You know how the future used to be metal? Flying cars, steel cities, jetpacks. But somewhere along the way, the future got squishy. Biology took center stage. And right there engineering that future with pipettes and Python is Ginkgo Bioworks. They're not just another biotech firm. They're the architects of a biological internet, one where cells are the servers, DNA is the code, and Ginkgo is the cloud platform making it all work. Founded in 2008 by 5 MIT scientists, Jason Kelly, Reshma Shetty, Barry Canton, Tom Knight, and Austin Che Ginkgo didn't set out to make a better drug or a cheaper fragrance. No, they set out to build the infrastructure for programming life itself. Their goal: to make cell programming as accessible, scalable, and repeatable as software development. And they didn't just build a lab, they built a foundry. It's the heart of Ginkgo, a 21st century factory floor where biology meets automation. Picture rows of robotic arms running DNA tests at scale, AI models optimizing genetic designs, and fermentation tanks brewing up molecules instead of beer. Every step: design, build, test, learn is automated, digitized, and looped back into their ever-growing biological codebase. That's the secret sauce. Every cell they program, every pathway they refine, every microbe that gets it right feeds back into their library of reusable biological parts. They're not starting from scratch every time. They're stacking wins like Lego bricks made of genes. And clients, they come from everywhere. Pharma giants using engineered microbes to produce complex therapeutics. Agriculture firms seeking nitrogen-fixing bacteria that can replace chemical fertilizers. Flavor and fragrance houses replacing chemical synthesis with fermentation-based production. Even the US Department of Defense, leaning on Ginkgo's platform for biosecurity and pandemic readiness. When Bayer wanted to spin off its agricultural biologicals division, Ginkgo said, "We'll take it." When Zymogen floundered under the weight of early hype, Ginkgo absorbed their assets, integrated their automation tools, and moved on. They don't just adapt, they expand. They've also racked up serious firepower. Over $1 billion in cash raised through SPAC and follow-on investments. A market debut in 2021 under the ticker DNA, valued around $15 billion at the time. Strategic partnerships with Moderna, Aldebaran, Roche, and Synlogic. More than 100 active cell programs running through the foundry at any given time. And here's the real kicker: Ginkgo doesn't sell products. It sells possibility. It's not bound to the success of a single therapy or a crop season. It gets paid to help other companies program biology, then it gets a cut of what they create. Royalties, equity, milestones. It's a portfolio approach to synthetic biology. Scalable, diversified, and designed to win even when individual bets fail. They're also a magnet for top talent, pulling in biologists, software engineers, automation experts, and AI researchers under one mission: make biology easier to engineer. And culturally, Ginkgo's weird. In the best way. Lab coats covered in circuit diagrams. Company retreats that feel more like Burning Man meets MIT. This isn't Big Pharma. This is a bio-revolution startup with a mainframe. So yes, the future got squishy. But Ginkgo Bioworks is building the tools to mold it. They're not chasing trends. They're laying tracks for every company that wants to engineer biology, but doesn't want to spend a decade building the tools from scratch. This isn't just synthetic biology. This is synthetic biology as a service. And Ginkgo, they're the operating system. Of course, for all its brilliance, all its ambition, Ginkgo Bioworks is not invincible. For a company trying to write the code of life, it's still wrestling with the code of business. Let's start with the elephant in the agar plate: revenue. For all its press, partners, and presence, Ginkgo doesn't generate much in the way of traditional sales. Most of its income comes from foundry fees, early-stage collaboration deals, and downstream royalties that haven't matured yet. There's very little recurring revenue. Very little that screams predictable. That wouldn't be a problem if the burn rate weren't so biblical. Ginkgo spends hundreds of millions a year to keep the lights on. Why? Because scaling synthetic biology isn't cheap, that high-throughput foundry. It gulps capital like a fermentation tank guzzles sugar. Payroll alone is massive. R&D is relentless. Infrastructure is hungry. And profitability? Still a distant star. Then there's the SPAC factor, because yes, Ginkgo went public via a special purpose acquisition company in 2021, riding high on the wave of pandemic-era hype and biotech exuberance. But that wave, it crashed. Hard. Like many post-SPAC companies, Ginkgo saw its valuation plummet from its $15 billion debut to a fraction of that in the months that followed. Retail investors were left wondering, was it real or just storytelling? Of course, for all its brilliance, all its ambition, Ginkgo Bioworks is not invincible. For a company trying to write the code of life, it's still wrestling with the code of business. Let's start with the elephant in the agar plate: revenue. For all its press, partners, and presence, Ginkgo doesn't generate much in the way of traditional sales. Most of its income comes from foundry fees, early stage, collaboration deals, and downstream royalties that haven't matured yet. There's very little recurring revenue. Very little that screams predictable. That wouldn't be a problem if the burn rate weren't so biblical. Ginkgo spends hundreds of millions a year to keep the lights on. Why? Because scaling synthetic biology isn't cheap, that high-throughput foundry. It gulps capital like a fermentation tank guzzles sugar. Payroll alone is massive. R&D is relentless. Infrastructure is hungry. And profitability? Still a distant star. Then there's the SPAC factor, because yes, Ginkgo went public via a special purpose acquisition company in 2021, riding high on the wave of pandemic-era hype and biotech exuberance. But that wave, it crashed. Hard. Like many post-SPAC companies, Ginkgo saw its valuation plummet from its $15 billion debut to a fraction of that in the months that followed. Retail investors were left wondering, was it real or just storytelling and culturally well. Brilliance and weirdness walk hand in hand. But scaling a company with MIT roots and a Burning Man soul isn't easy. Some critics say Ginkgo's culture leans too academic, too quirky, too distracted by the art of the possible. Investors want traction, not tea-dead talks. So yes, Ginkgo is ambitious, visionary, bold, but also bleeding cash. Dependent on early-stage customers, not yet proven at scale, and still fighting for trust in a market that's grown wary of grand biotech promises. The dream is real. The risks, also very real. Here's the thing about biology. It doesn't care about your industry. It runs through everything: food, medicine, agriculture, textiles, fuels, materials, scents, cleaning products, fertilizer, the skin cream in your drawer, the flavor in your soda, the insulin in your fridge. And right now, almost all of it is built on old chemistry, dirty factories, fragile supply chains, and living on borrowed time. But biology is renewable, scalable, programmable. And that's where Ginkgo Bioworks steps out of the lab and into the center of the 21st century economy. See, Ginkgo doesn't have one opportunity. It has dozens stacked like dominoes across every sector biology touches. And the biggest lever: platform expansion. As more companies realize they can't afford 10-year in-house R&D programs, they'll turn to Ginkgo. Why build a biological foundry from scratch when someone's already built the Ferrari and parked it in Boston? And every new customer doesn't just bring revenue, it brings more data, more parts, more tools, more biological code feeding the machine. Let's talk about biopharma. Ginkgo's already partnering with players like Moderna and Aldebaran. But MR at GIC. Cell therapies, next-gen vaccines, these all need precision-built microbes and strains. The industry is shifting from blockbuster drugs to customized, programmable medicine. And Ginkgo's foundry is built to deliver that flexibility in agriculture. The chemical fertilizer model is collapsing. Environmental pressure, regulation, soil degradation. The world needs microbes that can fix nitrogen, resist drought, and boost yields without wrecking the planet. That's not a future problem. That's a now problem. And Ginkgo's acquisition of Bayer's biologics division gives them an immediate launchpad into that space: industrial chemicals and consumer goods. Giant opportunity. Imagine replacing petroleum-based ingredients with microbes that ferment them from sugar water. Sustainable flavors, biodegradable plastics, fragrances brewed instead of mined or synthesized. It's not sci-fi, it's just waiting for the cost curve to tip. And Ginkgo's foundry is helping companies do just that. But here's the big one: biosecurity and biodefense. After C, O, V, ID, governments aren't playing around anymore. They want early warning systems for engineered pathogens. They want rapid response platforms for vaccine design. They want surveillance networks that can detect, respond, and adapt in real time. And who's building that backbone? Ginkgo. With deep ties to D, ARPA, the Department of Defense, and the US intelligence community. Ginkgo is positioning itself as the biological infrastructure layer for national security. Then there's the macro tailwinds. Public awareness of synthetic biology is rising. ESG investing is pushing for sustainable solutions. Supply chain reshoring is driving interest in domestic biomanufacturing. AI is accelerating everything, from protein folding to metabolic pathway design. And Ginkgo is sitting at the intersection of all of it. Oh, and let's not forget the portfolio model. Every customer could be a future royalty stream. Every engineered microbe could power a billion-dollar product. Ginkgo isn't betting on one drug or one startup. It's betting on life itself, diversified across sectors, time horizons, and technologies. So, yes, Ginkgo is still writing its story. But the chapter's ahead. Synthetic food systems, engineered climate solutions, personalized medicine at microbial scale. Biological computers, DNA data storage, and an entire economy running not on oil, but on organisms. If even a fraction of that future comes true, Ginkgo's platform isn't just useful, it's foundational. This isn't just an opportunity, it's a revolution in a petri dish. Of course, every revolution makes enemies. And if you're rewriting the code of life itself, don't expect the road to be smooth. Ginkgo Bioworks may be sitting on a treasure trove of biological possibility, but it's also sitting on a powder keg of threats. Strategic, competitive, political, existential. Let's start with the obvious. Competition is catching up. Ginkgo was first. They built the foundry. They branded biology as a service. But now, the field is crowded. Twist Bioscience, Berkeley Lights, Amiris, Arzeda Benchling, all chomping at the edges of the synthetic biology market. Big Pharma is waking up, building internal platforms. Big Ag is tightening control of its bio-IP. Even AI-first startups are accelerating protein design in silico, with no need for wet lab workflows. Ginkgo's moat. It's wide, but not infinite. The code base is impressive, but it's not proprietary like a drug patent. Competitors with better capital discipline or smarter automation could start biting at Ginkgo's margins, especially if clients demand faster ROI or lower costs. Then there's regulatory pressure, and it's only growing. Ginkgo's platform builds genetically engineered organisms, microbes that go into food systems, pharma supply chains, agriculture, even open environments. If regulators tighten the leash on GMO deployment or biomanufacturing licenses, Ginkgo's deployment model could slow to a crawl. One headline, one mishandled trial. One contaminated batch could bring the entire public perception crashing down. And perception matters, because ethics in synthetic biology is a live wire. The more Ginkgo succeeds, the more it will be scrutinized. What happens when engineered organisms escape containment? Who owns the DNA blueprints of life corporations or nature? Can synthetic microbes disrupt ecosystems? Replace jobs? Enable bioweapons? Ginkgo isn't just a company. It's a lightning rod for every dystopian biotech fear wrapped in one name. Conspiracy theorists, climate skeptics, anti-GMO groups, and even some environmentalists will line up to protest when microbes are deployed at scale in agriculture or manufacturing. And governments, they're watching too. What starts as Partnership D, A, RPA grants, pandemic surveillance can turn into dependency. If Ginkgo becomes a core piece of US biosecurity infrastructure, it becomes a geopolitical target. Foreign regulation, trade restrictions, IP battles, and international distrust could strangle their global ambitions. Then there's the business model risk. Ginkgo isn't a traditional product company. It relies on early-stage programs, future royalties, and milestone payments that might never come if partners fail, if microbes underperform, if downstream markets dry up or pivot. Ginkgo holds a lot of biological potential with very few guaranteed returns. And what about the stock? The post-SPAC reality check has hit hard. Investor sentiment is fragile. Public biotech markets are volatile. One earnings miss, one customer loss, one analyst downgrade, and the narrative changes from platform of the future to overhyped science project. Finally, there's scale risk. Ginkgo has acquired aggressively Zymergen, Bayer's Agbio unit, platform startups. Integration takes time. Culture clashes. Technical debt. If these acquisitions don't mesh, Ginkgo risks losing the very agility that made it a pioneer. So yes, Ginkgo's future is full of possibility. But it also walks a tightrope above a swirling mix of competition, ethics, regulation, market sentiment, and geopolitical fragility. The same tools that build the future can just as easily unravel it. So should you invest in Ginkgo Bioworks? That depends on what you're buying. If you want clean, tidy numbers, recurring revenue and quarterly predictability, Ginkgo's not your stock. It's messy. It's volatile. It bleeds cash like a biofilm on payday. The path to profitability isn't just long, it's non-linear. And the company's future depends not on what it sells today, but on what its partners may discover 5 or 10 years from now. But if you're not just buying a stock, if you're buying a vision, a bet on the programmable future of life, then Ginkgo Bioworks is one of the purest plays on that future available on public markets. This isn't a biotech company. It's a bio-infrastructure company. A picks and shovels play for the next gold rush, except the gold is DNA, and the tools are robots, AI models, and massive code bases of genetic parts. It's risky. Make no mistake, competition is fierce. Politics are unpredictable. Public perception is fragile. But the opportunity landscape is enormous. Pharma, agtech, climate, consumer goods, defense. Ginkgo isn't trying to dominate one market, it's trying to become the operating system of biology. And in that context, the upside is staggering. You're not betting on one drug. You're betting on the entire cell programming economy. So is it worth investing in? If you believe that biology will be the defining technology of the 21st century, if you believe that programmable cells will reshape how we grow, heal, build, and defend, if you believe that the right infrastructure wins in every platform revolution, then yes. But make no mistake, this is a moonshot, and moonshots don't land quietly. So, is Ginkgo Bioworks worth your portfolio? That's the million-dollar question, and now, hopefully, you've got the tools to answer it for yourself. If you enjoyed this episode, do us a favor, subscribe to Tech I Spy, share it with a fellow nerd or investor, and leave a comment with the next company you want us to break down. We're aiming for 10,000 tech companies, and we're just getting started. Until next time, keep your vision sharp, your research deep, and your investments weird.